Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Wednesday, July 7th. It is 6:15 as I'm starting the video, taking a quick look at futures. Large caps and small caps are largely unchanged. NQ technology is up 0.4%. Getting a bounce back in some of the commodities we track. Copper's up 2%. Oil's bouncing back 1.85%. Nat gas, the same 1.8%. Gold is up 0.7%. And if you're watching the gold chart, I've got two levels for you to watch. 1814 is my first level of overhead resistance, and then the next target would be 1833. And if they can clear those, then gold will be plowing higher ground. I did look up the real yields yesterday, and they were down to -1%. That's the difference between the 10-year, or I think it's the 5-year yield and 5-year inflation outlook. So one subtracted from the other gives you the real yield. And of course, the lower the real yield goes, the more bullish it is for gold and precious metals. Looking on the macro front, we've got mortgage applications this morning, Red Book, JOLTS, and the FOMC minutes at 2 o'clock this afternoon. And that may be a little bit more widely watched than usual, with maybe the potential of some more fireworks if the minutes disclose, a more hawkish contingent of the board governors, something like that. So be ready for that at 2 o'clock. And also this morning, the Chinese ride-hailing company Didi has been whacked another 25% pre-market as China pulls its app from WeChat and Alipay over there. So that stock has been totally decimated. I mean, it only IPO'd like 3 or 4 days ago, and I believe it's been cut in half. It was down I think it was down 20% yesterday and 25% this morning. I didn't actually pull a chart on it, but as Didi gets whacked, you got all these sympathy plays around Baba, Baidu, JD.com. Really, any of the Chinese ADRs are getting whacked right along with Didi. And you may want to keep an eye on those charts, because if you want to take a longer term view on some of those, higher quality names, I'm going to look at those later today and in the days ahead to see if Baba and some of these other names fall to a good support level. There may be an opportunity there. But regardless, if you're an active trader and you're comfortable, with the intraday charts, anytime you get a gap down like that, there's an opportunity for a trade if you're comfortable, reading candlesticks and playing those short-term charts. So you're going to see a big gap down in Didi, and you'll probably see a gap down in all those other Chinese ADRs as well. So the big news yesterday was the collapse of 10-year yields, dropping below 1.4%, closing at 1.37%. That whacked all the reopening trades, the cyclicals, the banks, anything having to do with reflation, reopening trades. They all got killed yesterday. So the thing to watch going forward, and if you are not someone that keeps an eye on the 10-year yield, pull up TNX and set yourself an alarm at 1.4%. Set yourself an alarm at 1.35%. and set yourself an alarm at 1.3%. If yields can recover 1.4%, then that reflation trade, recapturing a level from below is a buy. It's a bullish move. So if that level can get recaptured, the outlook for the reflation trade will look a little brighter. And then you'll be at the bottom of the range, and you can look for a move back up to the top of the range. But if you lose the midpoint at 1.35, then your next target is going to be 1.3%. And then, if you lose 1.3%, it's over. And what I mean by that, you're going to get a flush, and you're going to get some kind of a back test of these lower levels down here at 1.15%. And that's just going to destroy a lot of those reflation trades even more. So that would not be so hot. And I'm not even sure that would be so hot for the technology shares that are normally, falling yields are a headwind. But if yields absolutely collapse, I'm not sure if that would bleed over into technology or not. So we'll just have to wait and see. So we talked about TLT yesterday breaking out above this downtrend line and above the 200 EMA, first time above the 200 in a long time. So that's a technical breakout. I got long. I'm looking for a move higher. The next technical level is up around 150. So that is just a technical move that I'm going to stay long against this 145 200 level with a stop just below, and we'll see what happens. If yields move down, this trade will work. If it was a whipsaw move and yields go back up above 1.4%, then this trade will fail. So anyhow, I'm long TLT against the 200. I wanted to follow up with you some of these other charts. This is USO. This is the ETF that tracks oil futures. Set yourself an alarm here at 49.24. Even if you're not trading it, I think it's a good level to set an alarm. Why? Because if you see oil roll over, that's going to roll into, again, the cyclical trade, the energy trade, all that kind of stuff. And oil is highly correlated with SPY. So while everybody's, complaining about gasoline prices and all that stuff, and that's certainly true, rising oil prices is good for SPY. They're highly correlated. So if you see oil roll over and start falling apart, that's going to be a drag on SPY. So you can use it as a gauge not only for the cyclical trade, but also the SPY trade. So set yourself an alarm at 49.24. It's bouncing this morning. So this move here may have been just a whipsaw. The fundamental catalyst behind all that was OPEC not being able to come to any kind of production agreement. And then the speculation runs wild that, these various producers will just do their own thing and start producing whatever they want and kind of flood the market. So, but that, we've seen this with OPEC before. There's no deal until there is a deal, and then it's all fixed. So anyways, there's a good technical level for you to stay long against, or become concerned if that level breaks. Because if that level breaks, I think it comes down here at least a couple dollars to 47.75 on that chart. Here's another one to monitor as far as yields go. KRE, the Regional Banking Index. Set yourself an alarm at 63.75. If you break below that, you're coming down to the 200. at 59.50, and probably even coming down to this 56 level, I would imagine, at the next technical support level. So that would be a huge comment on financials. Financials will not do well with yields falling. And, you get that alarm at 1.35 breaking to the downside, and you get an alarm here on KRE breaking below 63.75. I mean, you can get short KRE and look for at least a first move down to the 200, if not more, especially if yields break 1.3, then it's game on to the downside. So be aware of that. Let's move on to the indexes. Actually, a nice technical day for SPY. Why? We had the breakout. We had a back test of the top of the channel. We had a look below that failed, and then we recaptured it towards the end of the day. So what I would be doing is setting yourself a little level here at 432 on the 2-hour chart, and then you can just stay long above that. Reminder, whenever you're outside of the channel on this breakout, you don't want to close below. And you notice here that we didn't. We had a look below, but then the very next bar we recaptured that level. So that was a positive bullish technical move. Break below support and then break back above and recapture it. Here's the 30-minute SPY chart. Again, very nice technical action. Why? Outside the channel, drop below. What do we say? A drop below a well-defined channel targets the bottom of the channel and at least the midpoint as a first target. So we got that. We got midpoint, broke below, next target, bottom of the channel, gap fill, hold, recapture, back to the midpoint. So that was very nice technical action, and that's why you draw the lines. Now, this looked scary, but at this point here at the bottom of the channel and on this gap fill, you had a pretty good risk reward there to go long. You certainly had the right level to shoot against. And then if that failed, then you would have had to get out of your long, and this would probably roll down to the next gap that needed to be filled. So today, we're right at the midpoint, recapture that level, and then look for a move back to the top of the channel. So that's what we got there. Again, on Qs, again, very nice technical action. Why? We're walking up the bottom of the channel. We broke below, had a touch of the gap, which held, recovered it, or put in this hammer, recovered the bottom of the channel, that's bullish, recovered this 59.50 level, recovered the bottom of the channel, that's bullish. So now we just reset almost exactly to the same level that we were at yesterday. So we want to see a move, an extended move, to get away from this bottom, I won't say danger zone. I mean, we're at all-time highs, so that's, how dangerous can an all-time high be? But I want to see something up towards the midpoint of this channel to get us some, running room, and instead of right here where, one or two red bars could, knock us down towards 354. So be aware of that. 30-minute chart, same idea. Top of the channel, rejected. Expect the reaction. Back to the midpoint, touch of the gap, back above the midpoint, Now you can extend that line and look for a move up to 362-ish at the top of the channel. So channel's working well. IWM, as we've been discussing, loaded with cyclicals, financials, reopening plays, not doing well. It was down 1.5% yesterday, and down even more intraday before we got the recovery. We broke below the 50, which is the gold EMA, the 50 on the daily, came down, almost got a touch of this gap here, bounced. So now today, this 225.50 is your pivot. Above that you can be long, and below that you can be short, back for another touch of the top of the gap. And what I've done here on the 30-minute chart is add the fib retracements, which is always what I like to do when I've got a deep plunge situation, because at some point you're going to get a reaction bounce. And this is, I mean, if you didn't catch these breakdowns, you can't just, you know, here out in space decide, oh, I should be short. That's way too late. Here was your first entry. Here was your second entry. And if you weren't short by 227.50, just forget it. You got to wait. You got to wait for that next support level. And we had talked about this. This was a level already on the chart at 224.50. We got a hammer below. It would have been nice to touch this gap here. Didn't quite get there. But then on the recovery of 224.50, that was your buy. Recovering a well-defined level from below is your long. And now here are the fib retracement zones where you'd expect the bounce to fail and roll over. So make a note of those levels, especially if you're long, or if you want to catch a short as the bounce comes up and fails at one of these two levels. Moving on to FATMAAN. Facebook more or less took the day off. It's still bullish. It's flagging here. It's in the, you know, comfortably within the rising channel. I think you stay long and look for a move above the midpoint of the channel for a run up to the top. And you can see just riding the 8-day, that's a signal of strength. I would stay long Facebook. I think with the falling yields, it's going to be a tailwind for mega cap tech. Here's Apple's 60-minute chart. I looked in the pre-market, was up about 90 cents. Here's the all-time high at 144. I'm looking for a tag of that. We're here at the top of this rising channel. And I wouldn't be surprised if we got to 144 and there's a hesitation. If it blows right through the all-time high, then it couldn't. There's nothing more bullish than that if we get an impulsive move to take out the prior high. Let me show you that daily chart just if you're new. Getting long down here at 128. We've been riding the 8-day ever since. Very few red candles. And here's that 144 prior high from back in January. So we had to almost touch yesterday, but it backed off a little bit. So maybe we can get that touch of 144 or even a breakout today. So Apple continues to look good. Not as encouraging here with Tesla. Why? Because we had this consolidation range. Then it broke below and filled the gap below. So now there's work to do to get back on the right side of this chart. They got the bulls need to recapture this 670 level. And then if you see that, you can get long there and look for a move to 690. But ultimately, to get this thing rocking again, we got to take out 690. And that'll open up 710 and 725. I want to show you the daily chart. So we broke out, had some sideways action, and now we've come back to back test the downtrend line and lateral support. Notice we've got the 20 and the 50 right below price. So if you're on the daily chart, you're probably slightly underwater. I would not give up right here, right now. The point where you gotta cry uncle is back below 640. I've got the 50 EMA at 645. And let's see. Yeah, the 20's at 649. So you can use that 50 at 645, and you know your absolute fail safe is 640. And if this comes back here, then closes back below the 50, back below the downtrend line, it just didn't work, and you've got to exit the trade at that point. Microsoft. At my midday update yesterday, I failed to recognize or realize that there was news out on Microsoft and Amazon. What was the news? You'll recall that the Pentagon had this massive Jedi cloud computing contract that Microsoft was awarded, and it had to have been a year ago. And Amazon lodged a complaint or a lawsuit saying that the process was flawed and that they really deserved the contract. And then yesterday the Pentagon came out and basically wanted to do a redo of that and say, you know what, let's split it. Let's split the contract. Microsoft can do half and Amazon can do half, to kind of put the thing to bed. So Microsoft was a little soft yesterday on that news, and then that was more fuel to the Amazon trade, which went bonkers. It had already broken out, but was like a booster rocket to the stock. So here's Microsoft 60-minute, still bullish as it can be. Working here at the mid point of the channel. Looking over at the daily chart, we're up here at the top, and while we have some room on the 60-minute chart, like I just showed you, if you caught a lot of this run, I'd be taking some off and booking that, because the odds are that you're going to get some kind of reaction here at 280, 281-ish, right here at the top of the channel. Just like what happened here, just like what happened here. This is resistance. Now, if we get a breakout, then it'll be just like the Qs, breaking out on the top, and then we can use the top of the channel as support going forward. Amazon, just absolutely incredible. Some guys in the trading room really got this, made a lot of money over the last few days. What I've done here on this breakout is I've dropped in the fib retracement lines. Why? Because we're out in space. We're out in all-time highs. And we've had this impulsive move. I would imagine at some point, we're going to get some red bars or some consolidation. And you want to know where those fib levels are, because that's where those retracements will go. I think one of two things is going to happen. One, it'll find a level, and then there'll either be a consolidation flag that we can box in and be ready for the next breakout, or we'll get a Fibonacci retracement that would bring price back in towards 35.75 or 35.50. And if you get that and you missed all this, that's where you got to get long. That's your second bite at the apple. Happens all the time. So let's watch Amazon here on this incredible breakout, and remember that we're looking for 4,100. Where does that come from? 600 wide consolidation added on to 3550 puts you up there at 4,100 or more. And whether it's 4,000, whether it's 4,500, that really doesn't matter unless you're long, right? It's all just talk at that point. And I went back and looked the most recent rocket up higher. Actually, we can show it here, I believe. We had a big long consolidation between 1,400 and 2,000. So that was, again, a $400 consolidation, and it added $1,500 in 1, 2, 3, 4. So $1,500. It went up almost 50%. Actually, over 50%. 2,000 to 3,500 is over 50% in 4 months. So don't underestimate how quickly we could get up in that $4,000 range on this big breakout. Netflix had a good day, right up to our next level of resistance at 4,250. Might get some hesitation here today, but then it's on to the gap fill at 550 is the gap fill, and then our next level of resistance above that is 552, and then it would be on up to 562. So not a particularly easy trade, kind of choppy, not unidirectional, but a solid trade nonetheless if you've got some determination and will about you, and you didn't get shaken out on some of these down moves or frustrating sideways trading, then you've done really, really well getting long at 515. There was never any technical reason to get out of that trade, and if you had bought some time, then everything's working out, and you should be thrilled at your entry and position at that point. So looking for higher, looking for the gap fill at 550. Google, very much kind of the same look as the Amazon. I put on the fib retracement. 2,500 was our technical target. We got that real quick. We got a back touch of that. And now we've gotten a bounce. So I've put on the fib retracements. If you get another pull into 2,500, or we take out the prior high at 2,530, that can be your long, and that can be, a stop just below. All-time highs you got to buy. And if price goes up here and takes out the all-time high at 2,530, you can buy it there and then set your stop just below. SMH had a breakdown, but then a recovery. We talked about that, I think, yesterday at the noon hour. Recovered 258. That was a buy. Recovered 259. That was a buy. Now we're looking for 260.5 and then 262. AMD, a little soggy yesterday, but no technical damage. Riding the 8-day. Measured move puts us up towards 100. That's what I'm still looking for. Stay long. I think the low yesterday was like 93. Yeah, the low was 93.32. I think as long as it holds in that area, holds the 8-day, it's going higher. I'm looking for 98 to 100. And as I've mentioned, a lot of call buying in the name. Out in time, which is what I always like to see, rather than all this stuff, Wednesday for Friday. that's bullish, but not as bullish as, laying out a lot of premium for calls in August, September, December, January. That's a much more significant bet. CrowdStrike remains strong with all these cyber attacks every week. Really strong chart, strong technical. Stay long, riding the 8-day, breaking out of this flag. I'm still looking for 280, something like that, maybe even a lot higher, but that's our technical target, 280, 285. Here's a new name for you, BIGC, an e-commerce company, I guess. Broke out of this lateral resistance here at 65, and you can see that it spent a lot of time right here, broke above yesterday. Now you can try and play this a couple different ways. Get long against 65, that's option one. Or you could, look at option two and say, you know what? I don't want to get long below the 200 and below the next level of technical resistance at 71, 72. What I want to do is set myself an alarm at 71. I'll give up that $5. Let me get above the 200. Let me get above lateral resistance. And then shoot for 87. And that way I could set a stop just below the 200. I can shoot for a $15, $17, $20 move. And that will be, a good risk-reward trade. Either one is fine. If you've got time and you've got money, you can get long here against 65 with a stop just below. Expect some hesitation. Expect some consolidation here at the 200. But you get that breakout above, 71, 72. I think you're going to get a fast run towards 87.50. CAR, Avis, reflation trade, cyclical trade, reopening trade, testing support here at 75. Set yourself an alarm at 75. You get a breakdown there. Take it short. I think you got 65 as your first target, and probably even at that point a test of the 200 down here at 62.50. So I like that short. Notice all the moving averages rolling over, price below everything. You got one last chance to save it at 75, and if you lose that level, I think it's a short. Carvana, we have been talking about this one. We talked about the fake breakout. We talked about a back test of the consolidation range. We talked about getting long in here at 300 with a stop below because we didn't want to see price go back into the range. That bounce play has worked great. Now what you want to see is 315 hold. And if 315 can hold, you can stay long for all-time highs. The measured move puts this up at 365 up here. So even if you're not even in it, if you wanted to take a position now against 315, that would be perfectly fine as well, and then look for 365. Okay, that's all I've got. If you're new to the channel, thanks for spending some time with me. I hope you found all the levels informational, and I think, in your trading, if you learn to trust what I'm doing here and trust the levels that I give you, that you can focus on execution and become a better trader. Look over in the show notes, got a couple links there. One is to the blog site. The other is to register for all my content. It's just your email. Takes 5 seconds, and then you'll get everything that I produce morning, noon, and night sent right to your email box, and really, really convenient. Long-time listeners, do me a solid. Help me build the channel by passing the link along to your Facebook groups, your trading groups, friends and family that are involved in the market and are technical traders. I'd really appreciate it. So let's see how we go today. And for those that are interested, this tropical storm Elsa, I think, is overhead. and just a lot of rain and wind right now, but nothing too dangerous. So I appreciate all your well wishes. So have a good day of trading. This has been Chris Buss with Traders Profit Compass. Have a good day.